Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Katie Greifeld. We're counting you down to the closing bell. Here to help take us beyond the bell. It's a global simulcast with our friends Massar and Madison Mills. Welcome to our audiences across Bloomberg Television, Radio Originals, and those folks streaming on YouTube. Massar, we are red across the board, but we should point out we're well off the lows of the day. Yeah. It looked like it was going to be a lot worse, but still some jitters out there about economic and macro conditions.
You know how sometimes we call this like a meh day? Like this is what it kind of feels like as we, it's low volume. You guys were talking about it. What?
And we should just point out, too, we're headed into a holiday, Passover starting, and, of course, Easter this weekend, a holiday shortened week for a lot of folks.
And it impacts things. And then we do get that Friday jobs report. Having said that, I'm looking at the semiconductor space because we are seeing some pressure there, down about 1.8%. Almost all names in that group, Maddie, are down on the day.
Yeah, but then you also look at the two-year yield. Again, I can't stop thinking about it, giving us back 40 basis points over the last 4 days and at its lowest level since September of last year. I keep making this joke over and over again. I would not want to be a bond trader right now just because I don't know what I would do, Katie.
I mean, if you're a bull, you're having a great time, but you got to wonder about the signal coming from that. Is this just
do you trust
the result
it, right?
of the squeeze or something? I don't know. But in any case, to your point, Maddie, wild moves in the bond market.
Yeah, and also keep an eye on the bank stocks here. It's kind of been interesting to see some of the moves there. A lot of focus, of course, was on Western Alliance and the disclosure or lack thereof last night and the update on that. But most bank stocks, pretty much across the board, are lower here. And it's not just the regional banks. Some of the big money center banks also under pressure here on the day as people are worried about the potential for a recession. Coming off that ADP jobs payrolls report this morning showing a weakness in private payroll growth. And, of course, that ISM services number that really disappointed to the downside, though still in expansion territory. The bells here in New York, the clapping continues, and well, you get a little bit of a bright spot with the Dow Jones Industrial Average, higher by roughly 80 points as we wait for these numbers to settle. That's going to be good for a gain of about 0.2%. Meanwhile, the S&P 500 going to look close lower for a second straight day, down 10 points or 0.2%. The Nasdaq down for a third day, down more than 100 points or about 1%. And the Russell 2000, which was down well more than 1% on the day, looks like it paired some of those losses into the close, lower on the day by roughly about 1% even.
All right, so let's break it down a little bit more. If you look at the S&P 500, we've talked about low volume. We know the index is down, as Romaine mentioned. But, Katie, if you look at it, almost an even split, about 223 names to the upside in the S&P 500, 277. So a little bit more of a negative sentiment to the downside, 3 unchanged in the trade.
Well, you can see that even split if you look at the industry groups. We have some green bars, we have some red bars. Let's start with the green bars. Very defensive. Utilities, they've been leading all day. That group up about 2.5% or so. And then you look down the list, you have healthcare, you have some pharma names. Again, very defensive. You also have energy in the mix as well. It's been an interesting week for energy. Of course, we came into the week with that OPEC Plus news, energy getting a bid today. Then you look at the bottom, you have autos down there, you have chips. So there you go, Carol.
Red bars, green bars, chocolate bars. That's what I really would like right now. All right, let's talk about some of the individual gainers. There's a few here. FedEx, we've talked about it throughout the day. We just talked with our own team about it in terms of what's happening. The company planning to cut about $4 billion in costs. They're combining their two main delivery networks, basically taking a page from the playbook of UPS. It's a big plan by the new CEO, looking to shore up profit margins, which have lagged by a big time what happens over at UPS. So shares of FedEx at their high, up 4%, with a gain, though, by the close of about 1.5%. First Citizens Bank shares, check it out, up more than 4% in today's trade, rallying. UBS raising its recommendation to buy from sell, lifting the target on the stock to the highest among analysts, data compiled by Bloomberg. And of course, this is following the bank's acquisition of Silicon Valley Bank. So again, up 4% for Citizens. And then Walmart, Romaine, you mentioned it earlier, up on, they had an investment community presentation earlier today. Company talked specifically about doubling its international profit in about 5 years, talking about $200 billion in international gross merchandise value in 3 years. Some analysts weighing in. They also like what the company's doing in terms of automation. So Walmart shares up about 1.7%, Maddie.
Well, I got to talk about Western Alliance. Romaine, you were talking about this earlier, pairing some of those losses now after they did disclose information about those deposits that they initially left out. The disclosure easing concerns about a statement from the company on Tuesday that did not update those deposit figures. Deposit balances have increased this month, cutting this year's decline to about 9%. Western Alliance saying the bank experienced elevated net deposit outflows surrounding the announcements of SVB and, of course, Signature Bank. But interesting to pair pair this information with what we heard from Loretta Mester earlier today about the importance of the Fed evaluating how much credit tightening we are seeing from banks across the U.S. I also want to talk about C3AI because Carol and I are going to be talking with the CEO in a couple minutes here, extending losses a little over 15% today. Tech in general struggling today. We've got Tesla down about 3.6% as we're seeing outflows for the first time in 6 weeks on the tech side of things. The drop in U.S. yields failing to add flows through to the tech sector.
Well, let's talk about the drop in U.S. yields here because this has been a pretty remarkable rally that we've been seeing in the Treasury space. 4 straight days for the two-year yield down about 3 basis points on the day. But I want you to take a look at the 10-year yield now. You're on a 6-day rally. That means buying in the 10-year yield. That's pushed yields down pretty significantly, including 4 basis points today. We're now at 3.2. We're just going to round it up to about 3.3 right now here on the day. This is actually the biggest rally that we've seen on the 10-year Treasury yield going back to early 2020, if you can believe it here. So it gives you a sense here of the pivot that we're starting to see by more and more folks in the market. We talk about risk on, risk off. This was decidedly a risk off day.
And you're seeing that across markets too, that risk off bent. But I mean, the Treasury market is fascinating to me right now. I mean, we've been hearing for months about stressed liquidity conditions. That came into very sharp focus over the past month. And now you're just seeing, like Romaine just walked through, this incredible rally. I will say the bond market is open on Friday, believe it or not. So we're going to have a chance to see the reaction to those jobs numbers in real time. Can't imagine liquidity will be too great there either.
No, but that's a good point, right? That we could get some reaction and certainly some key metrics, obviously, when it comes to whether or not we see wage pressure. So we'll see what kind of reaction. But that Treasury trade really telling us a very significant story about what investors expect from the Fed and what happens in the economy later this year.
But to your point, Carol, it's going to be really interesting to look not just at the jobs numbers we get this week, but specifically in the impact and the information we get from those jobs numbers related to services, because we know that that is the key area to watch for the Fed, and that's going to be critical in terms of sussing out what the terminal rate is going to be.
It's interesting, though. I mean, we were speaking with Anna Wong of Bloomberg Economics, yesterday, and she was kind of raising this issue of just how noisy the data has been. And I saw that Bloomberg Economics updated that recession probability model, basically saying that they're now seeing a 97% chance of a recession starting as soon as July. Now, they've always sort of had a model saying a 100% chance for the year, but the idea that they're moving up the timeline for the probability, I think is interesting. And she said that that's almost directly tied to the deterioration in corporate margins and corporate profitability, not necessarily in some of the labor market and other things that we've been paying attention to.
And of course, we'll get a read on all of that when we do finally get to the latest generation of earnings season, even though earnings season
never stops.
It never ends. But
Katie, you love earnings season.
We're going to do this dance again in a couple of weeks. But I was just thinking, I mean, a lot has to go wrong between now and July. We're already in April.
The good thing, though, I will say about heading into this earnings season, the number of pre-announcements that you've gotten has been pretty remarkable. And obviously that rattles the market, but it also means that, in theory, that means there's going to be fewer surprises, or at least you would hope there wouldn't be as many surprises, since so many companies have already come out with pre-announcements.
I just think about what companies are doing. We still get companies doing some deals, but we do get companies like a FedEx, new CEO, thinking about, okay, what's the smarter structure? How do I take cost out of the equation? So I do think we get a lot of announcements along that front. We'll see whether we get more.
I know you've paid attention to that company a lot, and I thought it was interesting because we know
UPS in particular.
Well, right. Well, let's talk about that, because Fred Smith, of course, was really against this idea of combining those units, something that, of course, UPS has that singular structure, and that's one reason why a lot of analysts had favored that company versus FedEx for so long.
Well, and what's interesting, we were talking with our reporter on the story, and, in particular, you have FedEx, they're not the same models. And we have to remember that UPS, all of its workers are UPS workers. FedEx has used, third parties. But they've also, our reporter telling us that, there'd be cases where you'd go to a location and you'd have, maybe 2 FedEx entities. Like, that's not efficient.
No.
And so they've got to figure out that model and make it smarter. Right. And they have a lot in the air, too. And that's a bigger cost part to their equation.
In the air.
That's part of the issue with the profit margins. planes, right?
Okay,
the
that's
planes.
Yeah, I got
Sorry.
it. I'm keeping up.
Yeah.
Don't worry. Maddie?
English is my second language, apparently.
Did you guys know that Carol moonlit as a UPS employee?
I did a day as
What
a
does
UPS.
that
What?
I did a day as a UPS delivery person. I mean, they're fascinating.
You're
they're
kidding me.
so no.
Did you
real
break down
news.
and cry when it was all over?
No.
Too
I
many
wore
packages.
I wore the brown uniform.
she killed it.
But they're so data centric. They track everything. I'm trying to be serious, but they're so data centric. They track everything. Even when they drive, they make right turns so that they're not sitting at stoplights. And I think FedEx is trying to be more like that model.
Right turn. Also, right turns only.
Well, you know what I mean. Well,
I'm gonna have to think about.
I mean, at
this.
some point they have to turn left, right? Or is this like
you just keep
this is
going
like
right.
auto
Faith
racing
is
where
going
you
to say
just
rap to save me. I know she is. She's going to say. All right.
it's efficiency.
It's efficiency. Listen, they're different models. Important story. All right. More to come at some point. All right. That's a wrap,
Maybe.
guys. On this
Are
Wednesday.
you here tomorrow?
I am. Are you here tomorrow?
No.
Aw.
Maybe I won't be. Okay, that's a wrap for this Wednesday. Our cross-platform coverage, radio, TV, YouTube, and of course, Bloomberg Originals. I will be back. We don't know what's going to happen with Romaine tomorrow. Catch us tomorrow at 4 p.m.